All right, so Vitaly, what was your reaction to SoFi earnings? Obviously, member growth 584,000, lost a lot less money than the street thought they would lose, 498 million. Raised guidance on adjusted EBITDA by $68 million. That is insane for a company to be able to do. Technology is growing. Galileo is growing. Seems like
you want to go through the deck, or do you just want to talk about it? Do you actually want to go through
share some of the deck? But yeah, go ahead. I mean,
I actually have that. Yeah, so let me bring it up.
I have it. I'll bring it up. Don't worry.
Okay.
The big number for me, I think I was
inbound XCX. Like Vitaly going to build 12, 1, 2, maybe 3 or 4 more pools to hold the cash.
SoFi is going to buy him some fucking pools.
The number that I was most impressed with was the drop in the customer acquisition. That was a huge. It was like $380, which is a fuck ton of money. But I still can't get the exact number of what that costs. We still have to figure that out based on the number of customers. I know it's dropped.
They spent $7 million more on sales and marketing from last quarter, but that $7 million got them 100,000 members. So that's why the cost actually reduced when you divide it by 5.
We can do some rough math on that, because that's a big deal. What that's telling you is that
wait, how much is it? 100,000 extra members, you said?
Yeah, than last quarter. So they spent 182 million on sales and marketing, I believe.
Can you do some? Can you put up a calculator? How much is that per person? Are they spending? I'm just curious.
That's 182 million divided by, what'd you say, 100,000?
Yeah.
Well, 584,000. That's the actual.
Oh, 584.
No. How much extra spend you said, or was it total spend? How many?
Well, then you do 7 million divided by 100,000, roundabout.
Yeah, it's the extra members we're talking about. So,
okay. So it's 7 million. 7 million. 1, 2, 3, 4. 5,
Are you sure it's only 7 million for 100,000? That sounds wrong.
Yeah, no, I'm correct. So sales, I'm looking at it right now. 182 they spent this quarter. Last quarter they spent 175 million.
Okay, so 182 million divided by 100,000 members. That's the extra.
If it's 7 million, it's only if it's 7 million for 100,000 customers, and they've dropped from $380 a customer to 70.
Yeah, but again, that's only for the new customers. If you divide it by 584, that's where you have to take 182 million divided by 584.
Let's see that 182 million.
Divided by
82 million, 1, 2, 3, extra 0, 1, 2, 182 million by 500 and what?
584,000.
84,000, and you get 311. That makes a lot more sense.
Okay, $311 they're spending per person.
It's still a lot of money, but what it's telling you is they are getting a better ROI on that, and word of mouth. It's word of mouth. It's people that are putting out their referral codes and getting it. Like, I wish we had numbers on that, but that's how it grows. And honestly, the word of mouth or a referral from a friend is better than anything that SoFi could pay for.
Look, the fact that if you bring up the stats again, how much do they beat it by? 18 million or so?
Revenue, they beat it by about 18 million. Yeah. Street expected 477. They brought in 498.
And this is why they're going up, because look, I put up a chart today, even on Twitter, like they keep beating guidance. So this has been happening already for over a year. So the fact that they keep doing this is a high quality startup or whatever you want to put it. But even if we call it speculative, this is a high quality company that you can sort of make a bet on. And that's what I did when it was really low at $5. It was an easy bet. Even right now, what is it? 10, 11? I didn't see what it went up to.
$11. Yeah.
You know, it's still sort of reasonable. It's still a reasonable price, but as it goes higher, if it keeps pumping, then I'll be honest, I'm not going to keep all my shares. I'm going to take some profits off of this. I don't know what you guys are doing.
Look, I think the big thing is on the conference call, Noto sounded like a rock star. He basically said, our strategy is working. We got 584,000 people to use this product. A lot of it because there's a flywheel happening, is what he says, between product and marketing and analytics, and then the customer referrals that you're talking about, Carlos, and the SoFi Stadium. Like, everything's actually going to plan. People are signing up and using the product. Like, there's actually people using it. There's student loans. They dropped 125 million in originations this quarter, but that's actually very bullish because in the summer, you're not going to get student loan refinancing. He went on CNBC today.
Well, it was 1% down, but this is not counting the student loans that are coming back, right?
That's his point. He was like, there's 39 million student loan borrowers in the United States, and SoFi in its history has helped 1 million people refinance. So there's a 39 million person market that's going to expand in the next 7 to 8 months when the federal government, puts their foot on the line and says you have to start paying. And SoFi is ripe to get that. And I think that's why they raised adjusted EBITDA as well.
He did say this too. I kind of on Seeking Alpha, I read this. More than 90% of SoFi money deposits, inclusive of checkings and savings and cash management, are from direct deposit members. So 90% of people are actually using their direct deposit. And then he goes on to say, and the median FICO score for a new direct deposit accounts opened in Q2 was 747, which is pretty high.
Those are
So the delinquency rate, I mean, that's going to be the next bear case, but I think they're really making sure that they're not going to have a high
If you have a 750 credit score, I don't know about if Carlos took a look, but I have lots of tenants that if you have 750, 800, you're not going to be delinquent. It is very unlikely. Okay.
Yeah.
Those people do not want to get into that kind of trouble because they understand what credit means. So
there's also a spot in that same Seeking Alpha article, I'm looking for it now, where even with this high interest rate environment, it's actually working to their benefit that they're mobile only. Like they just don't have some of the other overhead costs of the brick and mortar.
Yeah,
they're not dealing with any
big bull case.
It's a huge huge overhead that they don't have. And so once these rates do come down, that conversion rate is going to be insane, and it's also going to put more money in people's pockets.
Yeah. No, it's a big, and they originated $800 million more in personal loans, 3.2 billion versus 2.7 something billion last quarter. This quarter, which is insane. The $800 million they gave out in personal loans this quarter, which means they had the demand for it. The market was ready for it. They were a go-to name to be able to get personal loans. And the biggest thing is that this company has not gotten a tech multiple yet. Like the reason I invested is because VITALY got me into this whole AWS of fintech. That's growing, but it's not growing like crazy. It hasn't even hit its peak.
I'm glad you brought that up, because at least now it flattened out. I think they're up on a couple of million accounts right now, as opposed to losing accounts. So that is what I keep looking at. That is what I want to at least stabilize, because that's the way you get a real tech multiple, is from Galileo. It's not from the bank. I'm sorry. The bank is good, but it's Galileo.
Well, and then imagine once the rates actually do come down and the number of people that they can qualify for those loans, if they're doing 800 million right now in this environment. In other words, there's a lot.
Wouldn't they be making more right now with higher rates? Wouldn't they be making more money with higher rates?
They're going to approve less loans.
Yeah,
I'm saying they're going to approve less loans. The money's going to be tighter. So once it's a lower lower rate environment, not that they'll be like less strict over who they give loans to, but people will be looking for money because the rate is so small. That's going to help. That's going to help everything from them. That's going to help even end phase. Yeah, so just having a more favorable rate environment will do well. So it's kind of good that this happened so early in the company, because you get to see how Noto can, the levers that the guy can pull in terms of leadership in this kind of environment. Like I can't think of very many other environments that would be worse for his type of business right now. Yeah. And if they're crushing on this level for a company that's now they're $9 billion. I mean,
are they 9 only?
11 billion.
8.9 is what I saw.
Yeah, their market cap is really equivalent to their dollar amount. But it's incredible, man. I mean, it's just what they're doing. 584,000 members. No one expected that. And GAAP profitability, they're like 40. They lost a little bit more money than they did last quarter, but that's because they spent more on sales and marketing. So, I mean, they reduce a couple levers here and there. They're going to be profitable by Q4, growing at 6 million plus members. They're on their path to get to 10 million members by the end of next year or mid next year. I mean,
can you pull up the call? That was actually a good thing. At the very end of the call, he was basically saying maybe, Q3 might not that it won't be great, but it's not going to be a gangbusters, but Q4 is the one to look out for. This is the same thing that Badri said on Enphase call. Q3 is not going to be great, but Q4 is going to be great. So it's sort of like a dog whistle to people saying this is your time to accumulate shares, because what did they have? What did they jump double digits today?
They jumped 20%. Yeah,
20%. So this is now 7 out of 9 quarters. They've jumped double digits after earnings, right?
Let's point this out again. I hate pointing this out for the 10th time, but you chasers out there, do not chase. We've been talking about this for like a year or two. Okay, so we've been talking about this for a while. Anyone who's missing it should not be chasing this at this point, honestly. 20% pumps, it can go higher, big deal, but there's other things to catch.
Wait for. Oh, and speaking of which, I wanted to share this that I saw today. Check this out.
Nubank views. I don't know a lot about it. I know Tanner is super bullish on this company. I also think it's run up a lot. So just like SoFi, it's a little buying it now.
That's the episode that he invited me on. Nubank, amazing bank. The stats that he showed about that bank is absolutely insane. They are crushing
Latin America. Their growth is insane.
Yeah, the growth is insane. The problem is the valuation. It's at $40 billion. The time to buy it was when it was $5 in January. Yep. So it's the same sort of deal. It's like, imagine if SoFi ran up to a $50 billion valuation right now. As good as they're crushing it, you just don't buy it. And so, unfortunately, it was a great company that I feel like we missed out on the run up.
Yeah.
So.
Okay, let's so that's the SoFi stuff. If anyone has any more questions on SoFi, put it below. SoFi Weekly will cover that as well and go into depth into the numbers. We're still trying to figure out what they paid for Wyndham Capital, so Tanner will
So wait, the last thing, I think you said it, but maybe we glossed over it. The fact that they raised for next quarter too,
guidance, yeah.
that's important.